So the only way to win, I think, today in STRs is creating a truly unique stay. What I say, one of one. Which sounds like similar to what your Scottsdale property is. The people that are winning are just super pushing the envelope of unique amenities, unique design, amazing style, property, and architecture.
All right, guys, welcome to another episode of The Report. Today, we got some sunshine outside. We are in the middle of November, and I don't know how, but Thanksgiving is upon us. And before we know it, it's going to be Christmas, New Year's, and it's going to be 2025. But I am really excited because I got a special guest today who's in from Austin. And I'm very excited because he does something similar to what I do in the hospitality space. He is an experiential hotel developer and operator. He developed Onera Wimberley. He developed Onera Fredericksburg. I got my man, Ben Wolff. Ben, welcome to the show.
Thanks for having me on, Rich. Pleasure to be here.
Yeah, dude. Appreciate you coming out, man. You came out here with the parents and one of your kids.
With the kiddo, yeah. I got a 3-year-old who's obsessed with animals, so I've been looking for an excuse to come to San Diego, go to the zoo with him, the safari park, the aquarium. So it was the perfect kind of 2 birds with 1 stone.
I love that, dude. Don't you guys have a good zoo out in Austin?
It's decent. The San Antonio zoo is actually better. So we're members there. We drive that hour, and I take him there, every few months.
Dude, love that. And I'll tell you what, man, San Diego is probably the best. For this time of year, one of the best weather cities in the country right now.
Without a doubt.
Yeah. Okay, so first questions first, man, and there's so much to dive into in this podcast. I'm so excited for the conversation. But first question for you, man, what is modern traveler? You talk about modern traveler all the time. What is modern traveler? What does that mean?
Yeah, so the modern traveler is seeking a new type of experience than travelers of age old. I mean, for a long time, travelers, it was heads in beds. They wanted a hotel that was a good location for the attractions they were going to. It was just about price. It was just about value. And the modern traveler today wants to be inspired. They want to, go on an experience, an adventure. They're attracted to wellness travel. So we believe they're really looking for an immersive experience, a shareable experience, something that's tech forward, uniquely designed, and they're willing to spend more on their stay than they used to. So the amount that they're willing to spend on the place they stay is a lot more than it was, 20, 30 years ago. And we find at Onera, our treehouse hotels, we're shocked how many people come to our property and spend 80% of their time just on property. They're not going out and exploring Fredericksburg. They're staying on property. They're spending their time there, and that's where they want to be. The modern traveler they're very used to finding their next destination on social media. That's where they're inspired. They're an emotional buyer. They want to connect to the property, potentially the founder or the property origin story.
So you mentioned one hotel before we started recording, and they got one in Miami. They got one in Kauai, which I just stayed at their property in Kauai. And I believe they got a handful of others throughout the country. But I would probably say that's the nicest hotel that I've ever stayed at. And, rightfully so. I mean, it was not cheap. I want to say it was like $1,800 a night. But, man, just the level of service, the attention to detail. And this was an older asset in Kauai on the north end of the island. And, it's probably 1970s built asset. But they had just done a massive renovation. And I'm talking attention to detail, like literally floor to ceiling. Even this, like, the ceiling had all these little tiny, like, fixtures and attention to detail. Like, it was really, really immaculate, and it was probably the most impressive stay that I've ever stayed at. How would you would you say that they pertain to the modern traveler? Was that a good example of that?
I think they do. I mean, I think they're probably the best example of flagged hotels and big chains that, high key count hotels that are catering to the modern traveler. They're bringing green space inside like no other big hotel. There is an experiential component, an authenticity component, a sustainability component with one hotel that other flagged operators, I think, are aspiring to get to that level. They're probably the best in the game. And it's exciting that some of the properties that I developed, the landscape hotels, these properties that we're integrating into the natural landscape, we're actually achieving a similar NOI per key as one hotel, Miami South Beach, for example, which is one of the best performing hotels in the country.
And what kind of NOIs are we talking?
So one hotel, I think, is around $100K per key in NOI. Remember, they have F&B, they have services, they have tons of group business, corporate travel, and we are in a similar $80,000 to $100,000 per NOI per key range, depending on the unit type. We have a wide variety of units that are near Fredericksburg, but our better performing units are cracking that 100K a key.
That's impressive because we know expense ratios with hospitality are traditionally, about 65%, give or take. So you're talking 100K NOI per door. We're talking at least 200K gross per door, right?
Yeah.
Is that accurate?
Yeah, for sure. Some of our units are, 220K gross revenue. Our expense ratios are also pretty phenomenal for the industry. So Onera, our NOI margin is almost always over 50%, and it's often in the mid 50s.
Now, how do you guys operate with such a low expense ratio? Is that more so on the management side? Talk a little bit about that.
Yeah, I think it's multiple fold, right?
Okay.
So we're driving rate. So we have a higher rate because it's a very unique experience. We've invested heavily in capital expense to design these one-of-a-kind spaces that attract a higher rate and a higher occupancy. And then we're able to market on social media, which eliminates the vast majority of our OTA fees. So, we're driving over 80% of our business organically through social, not even using paid ads, to our direct booking site.
You say 80% of your bookings are coming from social media.
Coming through social media.
Wow.
Sometimes it's as much as 85 to 90.
Dude, I got to be honest. I had Isaac French on, who you're a good friend with.
Yep.
He came on a couple months ago, and it wasn't until I had a conversation with him. He came on the Hotel Mastermind call. We did a podcast together. And up until that point, I always knew the power of the personal brands on a personal standpoint and what that can do for you in terms of leads for your business, raising private capital, whatever it is that your venture is. Now, I always underestimated the power of the social media presence for a particular property. And, we got social media, Instagram handles for some of my nicer Airbnbs, but then also for all the hotels. But we've never really put a ton of effort into it, right? And so it was my conversation with Isaac 2 months ago that really changed my opinion on it. He's talking about the sale of One Oak Lake. Am I saying it correctly?
Live Oak Lake.
Live Oak Lake.
Yeah,
that one's always tough for me.
Yeah.
So he's talking about the exit of Live Oak Lake, and he's saying somewhere between 2 and maybe 2.2 million of that exit was purely accounted for by the social media presence because one, they had a couple 100,000 followers. They're driving a lot of their direct bookings from that audience, and so because of that, I was like, man, they drove a couple $1 million in exit price solely from this Instagram presence. I'm like, man, there's something to be said there. And so we've since made a big effort to kind of get a lot more content with all of our hotels, but also in addition to that, use some sort of influencer strategy. So I really want to dive into this topic, man. So what is the key? And you've done this with multiple properties now, and I know that you got this new social media management marketing agency that you're doing for third-party owners, which I want to get into later in the podcast. But what is the key here? If you're taking a newly renovated property, let's just say we go out there and we buy tired, underperforming boutique hotels, we renovate them, we make them look nice again, and we're rebranding them typically because when we inherit these properties, they come with a lot of bad reviews, and we're like, hey, let's just start over, right? And so now you're starting over fresh without a ton of reviews. What is the key to taking a brand new renovated property with 0 reviews, 0 social media presence, and really growing that following?
Yeah, I mean, I think as for personal brand, you need a story. You need a hook, and that can be you as a founder. It doesn't have to be, though. I actually have taken somewhat of the opposite approach that you have, where we focused on our property social media as we focused on the hotel, the experience, making that engaging, blowing that up. And my personal brand has come after that. I only really started investing in my personal brand about a year ago, and we've seen incredible results and returns from that, as you know. But I've never been all that out front and center on the Onera Instagram, for example. So we really focus on the storyline and creating engaging content that really pulls the guest in. I think one of the things that big hotels get wrong a lot of times is their content feels like an ad. And people hate advertisements, right? We pay a lot of money and do whatever we can to avoid ads. So you don't want these slow pan hero shots that are just, it's easy to scroll past. It just looks like any other TV ad. You need something with motion that's going to pull people in, maybe doors opening, maybe somebody running downstairs, creating this, tension and push-pull, and then you can hit them with the hero shot that is sort of that anticipation that they're hanging on your video, they're watching it fully throughout to get to that amazing hero shot at the end. So you have to create a story, you have to create some of that tension, and you need to blow them away with amazing footage and hero shots. And you have to have a well-designed space and a cool design architecture that they're gonna want to look at.
Okay, so I want to hear a little example. So we have a property that we're doing a full reno right now in Bodega Bay, Sonoma Coast, 44 rooms. This property is built in 1988. It never sold or traded until this year. We bought it in April. We're doing a full reno right now. The reno is actually almost done and completely repositioning this thing. We're doing a $2.2 million reno. So what would be an example of a good story that you would kind of tell starting this social media brand from scratch with that hotel?
So tell me a little bit more about the story in terms of why you wanted to buy it, what was the inspiration behind it, what is the story behind the reno, who are you trying to attract?
Sure. So 44 rooms, Sonoma Coast, which is like wine country, hour north of San Francisco, Bodega Bay. There's really cool wineries all around. All 44 rooms have bay views. Gorgeous asset, just very tired and in deep need of a refresh. And so loved the asset, fell in love with it, and obviously we bought it at a really good price point. Again, it had not traded since 1988, and so from a numbers perspective, from a aesthetic standpoint, it was just an asset that I really wanted to own. And so we're just putting and injecting a ton of life into it. Again, $2.2 million reno, we're bringing it back to life. Large rooms, all 44 rooms have the bay views like I alluded to, and close to all the wineries. So that's kind of little story, but yeah, I really love the asset. So it was called Bodega Coast Inn and Suites, and now it's going to be called Hotel Dega.
Okay.
Because it's Bodega Bay.
Yeah, very nice. And what's the theme and the thought around the design?
The theme and the thought around the design is coastal, but bringing out a lot of kind of like modern, a little bit more vibey. We have a lot of like blacks, a lot of like gold hardware, black hardware, and a good blend of a few different colors. So all of our wall art, we used a Bommarito art. And actually, you're staying at the Zindel, so you saw a lot of the art in there. So a lot of like black and gray, local art stuff that's like in black and white kind of frames, but all local art of the Bay Area and Bodega specifically. And then in addition to that, we did a lot of paneling throughout the entire property. So we did like a lot of greens, a lot of blacks, and that sort of thing.
And is there anybody associated with the project that you could put in front of the camera? I mean, obviously you do well on camera. I don't know, if you would want to be the face of this or tell the story or be kind of the founder-led portion of it, or is there like a GM or someone associated, the designer, that might make sense for that?
I don't know if there's specifically someone that comes top of mind that'd be like, this person would be great on camera to do it.
Yeah.
But you could figure that out.
No, but you don't have to go that route. I just wanted to know if it doesn't immediately come to mind, then maybe we go a different route.
Yeah, someone doesn't immediately come to mind.
Sounds kind of moody in terms of the vibe and the design.
It is, yeah.
The exterior, is the exterior pretty Instagrammable, or is it more the interior?
Yes.
And the views?
Yes, and if we get like drone footage, like on a good day where it's like good sunset and a clear day, we'll have drone footage of the entire asset, and we'll have like bay views. So it will shoot very well.
And would you say that the target demo is largely adult couples getaway, like that, like romantic escape type vibe?
Yeah, absolutely. I would say more of a mature demographic. A little bit of kids, but I would say primarily going to be 40s, 50s, 60s couples, that sort of thing.
So I would highly lean into that idea of romantic couples getaway. That plays extremely well on social. Selling romance is relatively easy. People want us to share it with their partner. So you're going to want to get footage of, oftentimes, even when we're promoting couple stays, we only have one model, a female, in the shot, but we do what's called non-primary character. So that model, it's not like look at me and the content isn't about that person. You might just catch them running down the stairs or in like the bottom sort of corner frame of a shot in a hot tub, right? So like you can envision yourself there, and it really brings it to life for you, what the experience is like.
Okay.
I would probably do
a really nice like standalone tubs though in these rooms, fireplaces, all that sort of stuff. Actually, let me pull up a video.
So you would definitely want to get footage in the tubs, right? That's a big part of the experience.
Yes.
I would say that we would probably first start with experimenting the hero shot of the exterior, showing a badass exterior drone shot while also showing the coastline, if you can, or I guess you said the bay, right? Yeah. So showing the water and the property.
This is like a little kind of preview of how it came out. So you can see the tub,
nice.
Indoor fireplace.
Yeah. Very generous sized bathroom.
Yeah,
with the
good
fireplace
sized bathroom
on the other side. That's badass. Yep.
And so these units are like very large, and so that's kind of like a little sneak peek of what they look like. But
that's great.
Excited for it. So okay, so you're saying tailored to the couples, couples romantic getaway. Do me a favor, bring your mic back in. There you go, perfect. And you're saying have a solo shot of the female.
Yeah, doing different things, running down the stairs, out to the water, opening the door to the bathroom and sort of, seeing all that has to offer. A shot, maybe with her in the bathtub, but just catching over the shoulder, not really focused on her, more focused on the experience. It's about that storytelling component and bringing the experience to life. Like,
Okay.
Typically, in a lot of cases, the female is driving that sort of couple's getaway decision in a lot of cases. And if you're, if you're the guy in the relationship, you're trying to impress, your significant other in a lot of cases. So seeing, a model in the shot, even though they're not the primary character, again, brings it to life. I would focus on Instagram. Instagram is where the vast majority of millennials, is their primary platform. So that would be the core focus. But I would also cross-post to Facebook because you're going to get older demographic as well, as you mentioned. And Facebook has all the boomers, right, on there, and they're very engaged. And winning with video content on Facebook is so much easier than Instagram.
Really?
Yeah, because there's so much less high quality video content on Facebook. So the competition is nowhere near as good as Instagram.
Okay, so you're saying Facebook Reels is like undervalued attention because there's less competition?
That's what we've seen. When we've turned on cross-posting to Facebook, we've seen videos that maybe weren't doing as well, and then all of a sudden they take off on Facebook.
Interesting. I got to start posting more on Facebook. I was doing a good job of like posting on both. And all of my reels on Instagram are like, there's a feature where you can say like suggest on Facebook, but to actually like post a Facebook reel to your page, you got to like go in there and manually post it. And for whatever reason, we just haven't been doing it. So we got to get back on it. That reminds me.
And I'm mostly referring to cross-posting and suggesting on Facebook, like you're saying, like ticking that button. It just opens up the amount of people that have the opportunity to view the reel, way wider.
Yeah, I love that. So those are good ideas. Now you mentioned having a good story is important. Would you say it's important for someone on the team to get out there and talk about the story of why we love this property and like how it's repositioned, we brought it back to life? Is that important, or you can tell the story with just some text on these videos?
So I think you can tell stories with on-screen text. That's most of what our agency does. We love the build in public. We love the founder-led stories, but you need somebody that can be the face, that can tell the story, that can show the passion. If you don't have that person, then it's going to be a challenge. I think you can also focus it around the team. If you have a very passionate team, the GM, the housekeepers, whatever, someone who runs certain experience for you, that can be a part of the story.
So if let's just say that I was going to shoot a few videos and I'm going to talk about the story of it, ideally, what should the flow of this video look like?
So the flow of that video, I would think you would want to do some before and after because it was a reno project, right? So I don't know if you have this or not, but you'd want some footage of the property before you renovated it, some video, ideally with you, and then you could, weave the story of why you bought it, generational asset, maybe even talk about the history, and then talk about the vision of how you want to transform it into this, modern traveler oasis for romantic couples or whatever it is, and then pop to what you turned it into, right?
Yeah, I love that. That's all good tips right there. And so, and then ideally, let me ask you this. How often should you be posting on these property Instagram pages?
So we used to think that it needed to be more than I think that it does now. We typically like to post at least twice a week.
Okay.
We've had certain accounts that have done well just posting once a week. And that's actually the biggest driver of our cost as a social media agency. It's how often are you posting? Because that determines how much content we need, how many shoot days we need, how much editing we have to do, right? That is the main driver of cost.
Okay. So would you say it's less of a volume thing than if you're building a personal brand? Because for me, personally, on my personal page, I'm putting out 2 posts a day, 1 in the morning, 1 in the evening.
If you have the bandwidth and investment to be able to do that, or if like you're doing the social yourself for a hotel, I think that can work amazingly well. But to me, I think we're seeing this more and more. It's more about quality over quantity, particularly with the hotel pages that we manage. So we'd rather put out a really thoughtful storyline, highly engaging, really good footage, some amazing shots once a week, as opposed to trying to post 4 times a week with like pretty underwhelming content that's not going to pop.
Yeah. Okay, so let's talk about the influencer strategy. What kind of focus should one be putting on that? And then like, what's the best way to bring in an influencer that's going to bring attention to your hotel?
Yeah, so influencer marketing is key. I do think there's become an inflationary environment around influencers. You used to be able to get the vast majority of them for free or a comp stay. Now the vast majority of them are asking for compensation in addition to the night stay. So it becomes all the more important to vet those influencers. And the two things you need to look for with an influencer is, are they targeting a relevant audience for me? Do they have authority in that space? And do they have engagement? Do they have good engagement? So it's got to be both of those two things. So for us, we're looking for, with Onera, local travel influencers, because the vast majority of our guests are drive-to destination travelers.
2 hours or less.
Yeah, or sometimes 3 to 4, but Central Texas, right? So Dallas influencers, Houston influencers, Austin, San Antonio are the primary feeder markets for us. So we want travel influencers that have those markets on lock. Now, we also look at and expand a little bit outside of travel to like foodie, for example. Foodie influencers we see do pretty well because there's like a hospitality component to what they do. So there's a little bit of crossover to hotels. So we've seen that do well. But like a fitness influencer, a TV star, something like that may have very little relevance and authority in the travel space.
Got it. So it could be a professional athlete with 10 million followers, but come stay at your hotel, very, very low ROI on that because their audience is all over the place.
It may be, unless that professional athlete, for whatever reason, has a lot of authority in the travel space and people, want to know where they're staying and want to stay there.
That makes a lot of sense. Okay, so what's the best way to identify these influencers in within a 2-hour driving range?
Yeah, so I mean, hopefully you're going to find them on Instagram. And look, if you hire somebody like us, we have the Rolodex of those influencers. We know who they are. We know how to go out and find them and work with them and negotiate with them. But if you're new, I mean, you have to play around on Instagram and you have to try to find these people, right? From searching, from looking for the type of content that you want produced for your hotel. You have to search for that content and see who are the creators that are creating that content. I think it's also great to get referrals. I've had a lot of success with referrals of other hotels, other glamping sites that have used influencers and seen amazing results. And so if you can compare notes with other operators, getting a referral for an influencer is like gold because you knew they drove impact, they drove followers, they actually drove bookings.
I like that. And so once you have the influencer, what's the tactic there? Would you say have them do a giveaway to their audience, or would you say do the 2 or 3 night giveaway to the influencer and have them come stay at the property?
So, I mean, historically, it's been both. I mean, we're giving a giveaway to the influencer to be able to get their content, to be able to post stories, and ultimately get enough content for some great reels that they'll post as a giveaway. And we'll use that giveaway to their audience to then drive engagement and propel that giveaway post as much as possible to get you followers and to get you engagement. The game is starting to change a little bit. We have seen some diminishing returns with giveaway posts. They're not as viral, let's say, as they used to be. I'm not sure if it's an algorithm thing where somehow the algorithm is identifying that there's this giveaway hack that is sort of hacking engagement. Sometimes they still pop off. I think it always comes down to how good your content is. If you have good content, if it's good content in the giveaway reel, it's still going to blow up. I mean, we did one for Onera Wimberley, our first post with, I think, the best.
First post blew up?
First post blew up, yes, because we did it with the right creator.
Ben Wolff. I got to start hanging out with Ben Wolff more often, man.
The right creator, right? So she has, I think, 800,000 followers. She's Central Texas based. She's vetted. We know she's good. She did an amazing reel for us, posted a giveaway, and we did like 1.3 million views on our first post with no boosting or anything.
How many followers did that get you?
15,000.
Damn, one post.
Damn.
I got to start hanging out with Ben Wolff more often, man. This is legit.
We have an insane sense of urgency around here. So
yeah. Okay. And so what was the key to that post? And is this thing I can pull up real quick while we're talking?
Yeah, pull it up. So Texas Explorer.
Okay.
We may have had some other construction posts.
Texas Explorer?
Before then. Yeah, but it might be kind of farther down her feed now. You might actually want to check our page, Onera Wimberley.
Okay, I'll do that.
Yeah.
Onera.
And then if you scroll to the bottom, I think the only posts we had before that one were like construction footage. We were kind of weaving the story of, before it was opened.
Yeah, okay. I'm pulling it up right now. Okay, so it says giveaway.
Do you see it? 1.3 million or something views. She shows this really cool drone shot that pulls you in of the tree canopy with our spyglass tree houses popping out.
Yeah, 23,000 shares. Wow, new Texas resort.
So
Beautiful
you got to
spot,
be ready
yeah.
for this kind of post. We found out because it broke our website. we
Damn.
had a new
Really?
Yeah, man.
Direct in terms of direct bookings.
Yeah, I don't know who you guys use. Do you use Cloudbeds? Is that what you guys use?
We use cloud beds for the hotels that are larger than 10 rooms, and then 10 rooms and under, we have 2 that we operate, and we use Guesty for those.
Okay, nice.
Yeah.
Yeah, we recommend HostAway or Guesty for smaller properties.
Yes.
They're more like vacation rentals. And then Cloudbeds is what we use for hotels. And we tried to move off of Cloudbeds because we weren't getting the tracking and attribution data that is like gold for us and our investors when it comes to social. It's so hard with organic social to get really good revenue attribution for your hotel, because when they go to your website and then they're led to the Cloudbeds booking engine, oftentimes you lose a lot of that data unless you do custom development work with Google Analytics to get all that revenue attribution. So we were running into pitfalls with that for a long time. We switched to a different PMS. That ended up being a total disaster. And we ended up having to switch back to Cloudbeds. But anyways, when
Really?
we
Wow.
switched to this other PMS and this other booking engine, we got so much traffic from that reel, 1.3 million views, that it shut our website down, and it took us like an hour or two to get it up.
Damn.
Yeah.
So, when you see this big demand pickup, are you guys pushing your pricing up a little bit?
We typically do, yeah. And there's a huge interplay between social media marketing, virality, and revenue management. And it's one reason we think those two things are so intertwined. They almost like must be done together. And that's typically, when we talk to owners, it's like, hey, our edge is in revenue management. We have some of the best revenue managers on planet Earth. I truly believe that. And then we have really good social media marketing. So those two things combined is like a superpower.
Dude, I love that, man.
Yeah.
How many hotels or hospitality properties do you guys manage in total?
So we have just about 20 clients that range from glamping sites, landscape hotels to 4-star luxury Hyatt properties on the beach. So it's a pretty wide range, and that encompasses all of our services from strictly social media marketing to strictly revenue management to full service management.
Got it. And so you guys are managing guests that are checking in, checking out, all the day-to-day operations, maintenance requests, basically everything.
We do that for some of our properties. It is a minority. I would say the vast majority of our properties right now are social media marketing and or revenue management.
Interesting.
Yeah.
I haven't heard of a lot of property management companies that just focus on that.
Yeah. Well, it's new. I think that focusing on social, focusing on marketing, and really what it is focusing on top line, right? And minimizing OTA fees, driving more bookings direct. It's so valuable. So I don't know why more property management companies aren't doing it. I imagine it's because they just don't have the capability.
Interesting, dude.
Yeah.
So I'm looking at this post, and one thing I noticed is what you said is you did it here in this post. You have a female model, or the influencer is probably the influencer in this case. She's in every shot. So it's like her getting in the jacuzzi, drinking a glass of wine, her walking out in the balcony, sipping a glass of wine, checking out the view. She's walking across the pool. She's laying on the bed. Okay, so this all makes sense.
But
now,
you almost
dude.
never see her face, right?
Never see her face.
Did you notice that?
Because you as the viewer, as the audience, you're actually like almost viewing the property from her perspective.
And you can more easily envision yourself in her shoes without
yes.
seeing her face.
Yes.
Yeah.
Dude, I love that. Okay. I actually just sent it to our Megan on my team who does all the marketing for us. I'm like,
And
you
got
check this out.
you got the hero drone shot in the beginning, right? That
Yes.
hero drone shot, this amazing canopy, the views, seeing the tree houses poking out. So it's like, whoa, what is that? Hooks you in, and then we take you on this story.
Yeah. Dude, that's so good, man.
Hey guys, if you're looking to get into real estate investing, but you're like, hey, I don't have the time, but you want to participate in the passive income, the tax benefits, and the wealth building, my company, Summers Capital, partners with limited partners, people like yourself, and we go out and buy boutique hotels. We have a fund where we currently own 5 hotels, and we currently have a wait list for investors to participate with us. If you want to learn more to see if this is a fit for you, you can go to summerscapital.com/invest to inquire and get on our wait list and be notified next time we have an opportunity. Again, summerscapital.com/invest. Now back to the show.
Okay, so there's so much to talk about here, man. It's crazy how much crossover that we have with what we do. So what is the key when we're talking revenue management? Because this is a whole nother beast, right? We get into real estate investing and all this stuff, entrepreneurship. There's a lot of different arms of the business. And so, for us, talk about some of our arms. So we have a fund. So we have investors, and we give them passive income. We give them tax benefits. And we're buying properties, we're buying underperforming hotels, renovating them, bringing them back to life. There's some sort of refi event once we capture that value add, and then we'll refinance a perm debt, hold these assets long term. And then sometime by year 10, we like these longer time horizons because we're buying them in good locations. We want to, be able to hold these things long term, let time do its thing, let inflation do its thing. The Federal Reserve has printed 80% of the money supply since 2020.
Everything's going
They're
up.
going to continue to print money. And then post-election, with the new office taken over, Republicans are controlling the House, they're controlling the Senate. Love them or hate them, I think there's going to be a lot of good policies put in place. They're going to favor real estate investors, limited partners, all that sort of thing. And I believe there's going to be more inflation. It's inevitable, right? So anyways, that said, that's one arm, right? You got investor reporting, you got investor distributions, and then you got the asset management, you got the renovation management, you got the property management side where you're managing the guests checking in, checking out. You got the revenue management. What's the pricing? What kind of marketing are we going to do? What's the social media look like for all these properties? And that's just that part of the business, right? And then there's all these other arms. But anyways, the revenue management is very important. It is probably the most important piece of all this, because if you don't have that dialed, all the other stuff doesn't matter, right? And so what is the key to driving revenue with the hotel side? We talked a little bit about the social media, but outside of the social media stuff, what is the major key there to really, really maximizing the top line?
Let's start with something obvious that I think a lot of people miss. Why not have somebody with a true mathematics background running your revenue management and not your GM or not somebody who's just kind of doing it on the side? I think we win at revenue management, and we're some of the best at it because we have people that have mathematics backgrounds. They understand expected value extremely well. And the high level of what we do is what's called compressionary and decompressionary theory, okay? So compressionary theory, think of it like a glass, and there's like a rubber ducky, and there's water in the glass, okay? As the glass fills up, okay, which is basically units in the market getting booked up or units at your hotel getting booked up, it should push the price up. Does that make sense? So that's the compressionary environment. Decompressionary is the opposite. Inventory's not moving. We're seeing it relatively slow. We want to get ahead of that and price very competitively under other comps in the market, so we get booked out many months in advance before the race to the bottom that happens a month out from low season.
Because like you said, you start waiting too long, and then you have to start chasing the bookings, and that's where you see people really cutting prices, right?
Race to the bottom. Everyone's doing it at the same time, so you want to get ahead of that. In low season, we want our average booking window to double or triple from what it is in high season.
That's really good. Okay, and what is typical? Because one thing that we found with the properties we manage is that the average booking lead time from Airbnbs to hotel, Airbnb is much longer. The larger the Airbnb property, the further out the lead time. So I got a luxury property on Scottsdale, does really well. This thing, I was actually just looking at the numbers. I'm going to put up a piece of content on it tonight. This thing's already got over 700 in the books this year. This is a single family property in Scottsdale. We're going to push 800. I'm like, guys, we got to put some content on this. This is pretty cool, right? But anyways, I say all this in that property, the booking lead time is like 75 to 90 days. It's like, it sleeps 30 people, so it's like you're not getting last minute bookings. Now, the hotels, we get a lot of like same day bookings for some of our properties. What is the average booking lead time for a lot of the hospitality properties that you guys manage?
So it does depend a lot on the seasonality, right? High demand or high season, low season. For Onera, we hover around 30 days. We get a ton of last minute bookings too. Like we get as much as 30% of our bookings last minute, especially during high season, within like 5 days of the stay. And I think what dictates booking windows more than anything else is the size of the property and how many people you're coordinating. So more than the platform, I would say, the fact that your Scottsdale place is how many bedrooms?
Yeah, 8 bedroom, 8 bath.
8 bedroom, 8 bath. You're
It's a guest house,
coordinating.
too.
You're coordinating 8 to 16 people.
Yes.
You have to plan farther out in advance. And we see the same thing with our Palm Springs property. That's a 23 bedroom, and
Wow.
each side, one's an 11, the other side's a 12.
Damn.
It's actually boutique.
What does that sleep?
Close to 60.
Damn.
Yeah.
That's crazy.
Yeah, so the booking windows for that are way farther out, right? So I think that dictates a lot of it. If you're doing a hotel room, a tree house that just sleeps a couple, you can drive bookings much easier last minute.
Yeah. Okay. Interesting. Okay. So anything else with the revenue management? Do you guys do OTA marketing? Do you do marketing on Google? Talk a little bit about that.
We do, yeah. We're on all the major OTAs, Airbnb, Booking.com, Expedia, Vrbo. all the big ones driving 90 some odd percent of the traffic. So our biggest one is Airbnb, and largely that's because that's our bread and butter. That's what we've done the longest. Before I got into hotels, I was in short-term rental.
Really?
Airbnb manager. Yeah, I was a host-entrepreneur, just like so many other people out there.
Okay.
I
were doing co-hosting too?
Yeah, and we were doing rental arbitrage, in cities before that really got cracked down on, which was a great cash flow business for a while. But yeah, we had a whole management team. So we built out from 2018, I quit my software sales job. We had about a handful of units under management. And then by the end of 2019, we had 200 across the country. So it grew very quickly. Then COVID hit, and we were mostly city, urban short-term rentals. So that business got turned on its head during COVID. And that's when I ultimately pivoted and kind of got pushed into doing more outdoor hospitality and landscape hotels.
Yeah, I love that. And so talk a little bit about what we're seeing, like big picture from a macro perspective. I made the shift because I was buying multifamily and I was doing some personal Airbnb and stuff on the side prior to getting into boutique hotels. And it was 2 years ago where I made the pivot over. Multifamily was getting more and more competitive. And I already had investors from multifamily stuff. And I already had the co-hosting business built out, similar to what you're talking about. And I'm like, okay, well, what if I take my investors that I have on the multifamily side? What if we take this co-hosting business that I have on the Airbnb side? And what if we go take down a small boutique hotel, do kind of a self-check-in, self-checkout process, operate lean? What would that look like? Did the first one, it went really well. And then that's when I started the fund. I said, hey, let's buy more of these. Now, one of the reasons I pivoted is because I saw a lot of the Airbnb regulations kind of tightening. I saw some of the oversaturation in a lot of the markets. And so I kind of saw the writing on the wall. And talking to some people in the Airbnb space like lately, they're telling me like, hey, like it's really dropping off in a lot of areas. Now, some properties are still doing good. My Scottsdale property cranking, but that's a very unique property, right?
It's one of one.
It's got a pickleball court. It's
Yeah.
got beach volleyball, full court basketball. It's got a speakeasy gym, all this stuff, right? It's a very unique property. There's not much competition in Scottsdale for that property. Now, I also know people that have 4-bedroom houses in Scottsdale with a basic pool, and they're getting crushed right now. They're getting ran over. And so I think a lot of the Airbnb stuff is like, hey, you got to have a unique property in the marketplace, and you got to be in a good market. Otherwise, you're going to get ran over. So talk about, from a macro perspective, this shift that we're seeing, because I think it's a big shift. I've been seeing it for 2 years. I've been calling it, been talking about it. And you still see people jumping into the Airbnb game right now, picking up their first Airbnb, and I'm like, dude, you're behind the power curve. So talk about this shift right now that you're seeing.
Yeah, I mean, look, commodity Airbnbs, you're way behind the curve if that's what you're going after. I would go as far to say as commodity Airbnbs are dead, in the sense that there's just so much supply that's come on the market. It's easy to get into that game. People perceive it as easy. So there's very low barriers to entry. So you've seen a ton of supply, especially during COVID. Like there was a short-term kind of boon for vacation rentals,
Yes.
which inflated numbers.
When everyone was kind of traveling domestically.
Yeah, we all kind of got high on COVID numbers,
Yeah.
and then everyone's like, oh, I got to get into that. So then the supply ballooned and the demand tapered off. People started going back to hotels, just as much as they were going to
back
vacation
to international
rentals.
travel.
Exactly. And so that kind of reversed the demand trend, but supply was through the roof. So it only makes sense. So the only way to win, I think, today in STRs is creating a truly unique stay. What I say, one of one. Which sounds like similar to what your Scottsdale property is. The people that are winning are just super pushing the envelope of unique amenities, unique design, amazing style, property, and architecture. We have this one client on the social media side that has the most insane lazy river I've ever seen in the back of their property in Indio, and that pops off, right? I mean, that property's doing over $1 million in top line because it's got a lazy river in the backyard. So you have to push the envelope to such an extent. One of the reasons I like hotels is because I feel like if you have a even slightly larger number of keys, and ideally, 25, 30 plus keys, then you can do these amazing amenities and this amazing design and these amazing communal spaces, and that cost is spread across all of the units. I do think the modern traveler does yearn for privacy and seclusion, so if you can make that hotel more like separate casitas or very private feeling units, I think that goes a long way and drives rate. Amangiri is like the best example of just insane rate driven from a hotel with shared walls. It's not private separate casitas. It's one big hotel. I mean, they have the glamping site that's like an offshoot, but their main hotel is shared walls.
That's how the one hotel is too.
But it feels like you're the only one there.
That's interesting. So what do you think? I mean, because I see all these markets that are regulating, and we saw what happened in New York City, San Francisco, Los Angeles. You're seeing it across these markets, and I think this trend is going to continue. San Diego, where we live, they just slashed the Airbnb supply from 17,000 to about 5,500 licenses, and so I think this trend's going to continue. And I'm seeing that bringing demand back to the boutique hotels, these smaller properties, the unique stays, increasing the ADRs, and so I'm like, man, this just makes sense. Now, when you think of someone out there, maybe listening to this podcast, and they're investing into short-term rentals right now, and they're looking for that next thing, I also think it's the next natural progression for all these Airbnb investors out there. I think if you manage or operate 5, 6, 7 short-term rentals, you already have the fundamentals to go out there and buy a small boutique hotel, right? And so I think it's the next natural progression for all these folks. And so I see it as the next big thing, and then you got all these baby boomers retiring, and they're already calling it the greatest transfer of wealth in American history. 40 million boomers retiring in the next 7 years. It's estimated that 25% of the hotels out there that are priced kind of 10 million and under are owned by these retiring boomers. So I see it as a big opportunity. Now, for someone listening to this that's maybe interested in going in and jumping into their first hospitality project, what would you say is the best path for them? Would you say, hey, go buy more of a traditional hotel, go buy a flag property, go buy like a unique stays property? What's the direction that you think is the play right now?
I would go one of two routes, and I think you exemplify one, and I probably exemplify the other. So one route is you go to a market that's on the uptick. It's partially, largely a real estate play, right? And so you're picking the market based on growth trends, demand trends for hospitality and tourism, and you're picking a property that has a lot of value add potential that you're going to be able to buy, renovate, and then bump ADR and hopefully occupancy as well in a matter of 6 months. Quick return, recycle cash, refinance it within a couple of years. Now, the other side is you go to a market that has less regulation, that has cheap, beautiful land. I mean, the Texas Hill Country is one of those. There's a number of places like that, similar to what Isaac did. So you buy relatively cheap land and you go ground up in an area with less regulation, and you create something that's very differentiated, very remarkable, creates its own destination, and is very easy to sell on social and kind of blow up to build both your brand and this landscape hotel or experiential property brand. And then you can get kind of crazy multiples, crazy IRRs, right? Some of the stuff that Isaac and I have been able to generate, but it does take a little bit longer, and it is a little bit more of a risk, right? And it may be harder to get financing and things like that, but I do think that those experiential properties on beautiful but relatively inexpensive land is a massive opportunity, as well as what you're doing, buying assets in great locations, giving them a refresh. So I think one of those two strategies is the way to go.
With your model, what is the biggest risk? Because with my model, we're buying existing hotels that are underperforming, renovating them, making them nice, refinancing, and then holding them. The biggest risk is running out of money when you're doing these renovations, right? So we're often shutting down these properties for 3 months, 4 months, 5 months, doing the full reno. There's no income coming in. And so we got to make sure that we got enough money in there to get through our renovation, to get through all the design, furnishing, all the CapEx that needs to happen. And then we got to make sure we have contingency capital set aside. So, often these projects go a little bit over timeline, and they typically go a little bit over budget. So we got to make sure we got our contingency capital there. But you can't bring in too much money because now you're watering down the return profile. So I feel like it's kind of a balancing act. And there's a lot that can go wrong during the renovation period. Now, once we get through it, we relaunch. It's like, okay, most of the risk is behind us. Now, what's the biggest risk with your model?
So first off, I want to say I think the riskiest thing you can do is buy a commoditized hotel that is, let's say limited service or something that's just a complete commodity, and you're just basing it off of market and real estate, which you have real estate value, which you have very little control over. So what we're both doing is differentiated, and I think sometimes viewed as more risky, but I actually think it's less risky because the asset is so unique.
Yes, we're forcing appreciation.
Yeah, exactly, and just outsized value in design and experiential and providing something unique that people want. So that's the first thing. In terms of what's risky about our ground-up developments, I mean, it's what you would expect. It's construction and development risk. I mean, having the right GC, it from renovations, it's even more true, I think, in ground-up, will make or break your project. So, I've been through some hard times with construction and GCs and builders, and I have come out the other side of that, and now I have a GC and development group that is world-class, knows how to build these one-of-a-kind projects, is super bought in to my vision and the company's vision, and I only want to work with them in the future. Because I know what it's like to work with somebody that, doesn't come in on time and on budget, and somebody that does, and somebody that'll break through walls to make sure that it's a successful project. And that's just hard to find in a GC. How I found mine was actually through a recommendation from my banker. If your banker recommends a GC, they probably came in on time, on budget. They were up to stuff, professional. Doing things the way they're supposed to be doing them.
Yeah, I love that. So biggest risk is finding the right GC for these projects. That's good to know. Now, what about the timeline to get the permits to be shovel ready? I mean, that's got to be a little bit of an unknown, right? An assumption going in, because if that takes longer than expected, and I got to imagine a lot of that stuff is out of your hands or out of your control to a certain degree, does that add an element of risk?
It does. California is definitely tougher than
the bureaucracy here is
than
tough.
Central Texas.
Yes.
I mean, so people think Central Texas or unincorporated Texas outside of the cities is the Wild Wild West, and you can do whatever you want. It's not entirely true. So it is true that there is not zoning, which is a big leg up. You don't have to change the zoning or get some conditional use permit. But the way that they try to stem development in Central Texas is through water. So water is a precious resource that is scarce in the hill country. So there are these water districts that you have to get approval through to get a water permit of a certain size. So for much smaller projects, 5, 10 keys, 15 keys, it's much easier to get. But when you start getting into 28, 30, 40 plus keys, it becomes more challenging to get the amount of water that you need in your permit. So that's one way that development is stemmed in Texas. But I think it really comes down to your market, right? The development risk in California and getting those entitlements is probably much higher than in Texas, right? Than some of these unincorporated areas. But even in Texas, I mean, we give at least a year for our projects to do planning, entitlements, and get to construction documents. In California, it's probably 3, but yeah.
Now, on the flip side, if you can get that done in California, because the barrier to entry is so much higher here, your asset is going to be somewhat protected from more competition.
Totally agree. So and this gets into the other risk with unique stays development and landscape hotel development, and that's capital. Can you get the bank financing? Can you get the equity financing? Because even if it's a no-brainer slam dunk, there's still a perception of risk for a new asset type, a new type of hotel, and just that it's ground up. That comes with more risk. So equity and debt can both be more challenging to get. But if capital's not an issue, then I like highly regulated markets that take a number of years. Because if you're going to build a $100 million asset, you would love to have those barriers to entry and pay a couple $1 million on the front end to get those entitlements, to get that through, to know that your asset's protected and is going to be differentiated and unique for years to come.
Yeah. I've had Mikey Taylor on the podcast a couple times, ex-pro skateboarder. He's doing some big stuff, but he's got multiple funds, and they do strictly ground-up development for multifamily in California. Los Angeles, they do some projects in San Diego. And he's talking about exactly what you're talking about. He's like, dude, yes, there's a long barrier to entry. The timeline from us buying the land and actually being shovel ready can be like 3.5 years. But he's like, dude, once we build, he's like, we don't have a ton of competition, and our investors, they don't need their returns for a long time. And he's like, we build this thing up, we make a really nice spread, and there's not a lot of competition, so they're taking advantage of the regulations. So I don't know, I find it interesting, man. I've always wanted to do something kind of cool, like some sort of like unique stays property, but out here like in the San Diego area, where maybe like you're 30-minute drive from like downtown San Diego, where it's like inland. It still kind of feels excluded and remote, but it's still only a 30-minute drive from everything. I thought that'd be kind of cool, but I don't know, man. There's a lot of options out there, and I think sometimes the growth as an entrepreneur, as a business owner, is like you got to say no to a lot. 99% of the stuff that's thrown out your way, the opportunities, all that, and just really stay focused on what you're good at.
Yeah. So a couple things there, and focusing on what you're good at. I think that if you're really good at entitlements development and you have capital, go after those highly regulated markets. If you're good at marketing, if you're early, if you think you can figure out innovative ways to build your brand, then go out to Central Texas and build something super unique and cool that you can get up and running quickly, because there's compounding returns to your personal brand, to your story. I mean, look at me and Isaac, right? We got our first properties up and running within a year. So it massively accelerated how fast we could grow our personal brands and how other opportunities would come to us. We're not waiting 3 years to start building something. So if that's important to you, I think getting up and running quickly is important. And if you're good on the marketing and branding side, then you can win even in a crowded marketplace. So even if you have other entrants that are coming in, you can still win if you're the best at marketing and branding. And then you just need a product that is going to blow people away. So Onera in Central Texas, in the Hill Country, is one of many unique stays developments, and like many more are coming online. But I think you'd be hard pressed to say that we're not the coolest, we're not the most unique, we're not the most elevated experience. And so that creates a barrier to entry. Somebody can't spend as much as we spent on these units to make them truly one of a kind and sort of top of market.
Yeah, absolutely. So Onera Fredericksburg, this is your first one,
First
right?
one, yep.
Okay. So you guys had an exit. You guys sold it for about $7 million. Congrats
Thank
on
you.
that. It's always great to go full cycle in terms of like your real estate resume and that sort of thing. So congrats. Talk a little bit about that deal. You know, obviously I just pulled up the social media account, and by the way, encourage all the listeners to go check it out. What is the social media account for Fredericksburg?
Fredericksburg is Stay Onera, Onera, and then Wimberley is Onera Wimberley. And we could talk about one account, two accounts, those decisions, all that. But.
Yeah, definitely check out both of those accounts. So talk a little bit about Fredericksburg. What was the kind of like design element going in? What was your vision in that sort of thing?
For sure. So look, I came from commodity short-term rental world.
I'm pulling it up as we speak.
Yeah, we were doing, city rentals. COVID hit, and that really hammered that business. And I was inspired to do something more outdoor, landscape focused. Me and my wife had just gotten off a 6-week road trip for our honeymoon. So we did an RV trip all around the Southwest. We hit like a dozen national parks, and it was amazing. I mean, we woke up overlooking these incredible mesas and hoodoos and canyons and seeing the sunrise, and it was incredible. But there was all these gaffes and issues with the RV, right? Like we'd have a compartment break and our stuff would get littered on the highway, or we'd have some filter that broke down. We'd have to drive 4 hours to get to the nearest dealership to get it fixed. So there was all this friction to the experience. So with Onera, I wanted to create something that was much more frictionless, luxury, and really all the comforts of home and then some, so that you could go to these inspiring units and be surrounded by nature and really reconnect with yourself, your partner, and nature again, without any of these frictions and things that pull you out of those perfect moments. So that was the idea around Onera Fredericksburg, the first property. And I wanted to do very unique, inspiring units set in nature. It was kind of a testing ground, our first property. So we have like 8 different unit types for only, it was 8 unit types and 8 keys originally, and we've since added 4 more keys on that first site. But we had everything from container homes to safari tents to custom tree houses, one that was shaped like a butterfly, one that was shaped like a tube, set up in the trees. So a wide variety of unit types, and we wanted to see what does better, what's harder and easier operationally, what has more maintenance issues and longevity. So we were able to do that, and I came out of that only wanting to do hard-sided units because the soft-sided ones were such a pain. But,
really?
Yeah.
Why is that?
So because we were doing something elevated and more luxury, it didn't end up costing that much more to do hard-sided than soft-sided. Because when you do soft-sided tented, you still have to build out the interior, you still need a foundation, you still need that nice tile and wood or LVT flooring that sort of screams upscale. You still need the expensive furnishings, you still need the land. So the only savings you're getting is tent versus the wood framing and sort of the exterior facade. So it ends up being maybe it's 15% more or so to go hard-sided, but we're seeing at least 10% more in rate year over year, and sometimes way more than that. And you can also do, I think, way more unique things with hard-sided, right? We can build something that looks like a butterfly. We can, build a tube-style treehouse 30 feet in the air that's like cantilevered.
That one is sick.
Yes, yeah, that's Monarch.
What would you like call that design?
I would call that modern, landscape hotel. I mean, it's sort of a modern take on a butterfly. It's very angular. It's a double peaked roof. There's an offset, which makes it look very unique and interesting from the exterior. So there's 2 main rooms with these massive vaulted ceilings, and the 2 rooms are offset, so you can get a window in between them, and it just creates this really interesting architectural vibe. We actually, in our expansion to Fredericksburg, we have some new unit types. One of them is a sort of a remix to Monarch. which is called Diamond, where we have 2 diamonds that are sort of smushed closer together, so you can still get this amazing shoot-through moment when you're doing video and Instagram and all that, but it still has that uniqueness of being offset, and it still has the massive vaulted ceiling and the peaked roof. So we're constantly pushing the envelope with design and how we can do something that's going to pull people in, stop scrolling, and book direct.
Yeah, I love that. And then talk about the pool. I noticed you guys have a pretty unique looking pool here. What's the key to putting together like a pool that's going to be the most conducive with bringing in ADR and growth and also longevity in terms of like a repair maintenance standpoint?
Yeah, so I think the pool is the most important amenity, especially for us in the Texas Hill Country where it gets really hot.
Yeah.
In the summer, it turns what would be slow months into some of the best months of the year, because if somebody's going to travel to a driving destination in Texas, it has to have a pool. And if you don't have a pool, you're kind of filtered out. So we invest heavily in those areas. The one at Onera Fredericksburg is elevated, so it feels like you're up in the tree canopy, and there's a walkway that's like a elevated bridge that goes over to a hammock and a swinging chair area and all of that. We actually ended up switching from one big pool to 3 smaller pools because our demographic is all couples. And we found that in that one big pool, there'd be one couple in there and another couple wouldn't want to go in.
Oh, wow.
So now we have those 3 pools so they can have their own little intimate private experience.
And those are the 3 right there?
Yes. Yep.
Okay, got
so
it.
yeah, there's 2 on either side.
So
and
they're
one
all
in the
next
middle.
to each other.
Yes.
So you just basically divided them up.
And they're modular. So it was much faster to get in there. It was more cost effective.
Yeah.
They're like fully contained units.
What does a pool like that run cost-wise?
Oh, that's a good
Ballpark,
question.
what are we talking?
Yeah, I think that each of those modular pools was about, I think it was somewhere like 50 to 70 grand, like in that range, depending on the size and scope.
Got it. Okay, so then you go out and you do Wimberley. And I think something that's unique with Wimberley is you got this like the greenery on all the roofs. What is that?
Yeah, so that was something new that we did there. Green roofs is what we call it. Effectively, they're fully vegetated rooftops that have 30 species of native grasses and wildflowers. And one of the reasons we did that is that the land called for it. There were these, on that part of the hillside, there were these amazing expansive views, but the hillside was a little more bare. There wasn't quite as many trees to do more typical treehouse units, and we wanted those units to still blend into the hillside and be aesthetically pleasing if you're in Wimberley looking up at our hillside. So, and it's amazing for drone footage as well. So we put in the green roofs, and one of the things that we did from a sustainability standpoint is we're actually using the shower water to water those roofs.
Oh, that's pretty
So we have
cool.
a gray water system that pumps up the water and keeps them looking green and everything in bloom. So it's an exciting way to conserve water. And we make sure to use all organic products in our showers and ask people to use them so that there's minimal chemicals going up into the green roof.
That's pretty cool. So how many units is Wimberley?
Wimberley is 28 total. There's 16 of the green roofs and then 12 of the spyglass, which is that tube-style treehouse that is perched on the higher hillside and kind of pokes out from the trees.
I'm going to pull this up so I
Yeah.
can take a look while you're describing it. So
Yeah.
28 units. And where's Wimberley located?
It's just 45 minutes south of Austin.
Okay, so this is not too far.
And we have a 100-person event space as well. We're getting into the group business and event space with Wimberley. It's a great place for corporate retreats, a board meeting, client entertainment, an intimate upscale wedding, wellness retreats. Really ideal for any of those uses.
Yeah, I can tell. By the way, those tube-style units are freaking awesome. What does something like that cost for one of those units to build?
So ground up, not including land and utilities and all the rest, just going ground up, it's in the mid-4s. So call it like 450 grand.
Yeah, mid-4s. Damn. Okay.
So you got to remember too, the structural steel on that alone is about 100 grand. So you can see there's a cedar hot tub on the end that is cantilevered over the structures. That's about 2,000-3,000 pounds of additional weight, and then you have that back deck, and it's all cantilevered overlooking this view. Because of how much drop-off we have on that hillside, you'll walk in on one side of the spyglass, and the back side might be 30 or 40 feet off the ground.
And then how do you guys do the plumbing and the sewer?
So for the spyglass units, it's feeding down into septic tanks that are then pumped up to a leach field. So it has to gravity flow down, and then it's pumped up.
I can tell that you guys, I can tell the difference between Fredericksburg and Onera. It sounds like Onera, you guys went, you guys doubled down on like the whole tube stuff and like the unique stuff that each unit has its own like little like tub.
Yeah, every unit has a private hot tub.
Yeah.
We definitely went a little more upscale with Onera Wimberley than Onera Fredericksburg. And some of our units at Onera Fredericksburg are, right up there with it, like Monarch and Spyglass. But we saw that our nicest, most expensive units not only had the highest rate, but they also had the highest occupancy. So like Monarch has a $675 ADR and running occupancy in the high 80s, even pushing 90 sometimes. Whereas our more mid-tier units, 20-foot container homes, their ADR might be 300, and they're only running 50% occupied.
Really?
So when you think about the incremental cost of just doing a nicer, more badass unit, it pays for itself so quickly, and it's just such a better investment.
What's the difference in cost to build both of those two units, ballpark?
Yeah, so I think that the smaller container units fully loaded is probably closer to like 275. And Monarch is probably closer to 5. So it's double, but you're getting more than double the ADR, and you're going from 50% occupancy to like 88% occupancy. So the RevPAR is probably quadruple.
Yeah, absolutely. Damn, those are not cheap units to build.
No.
We're
not
talking,
at all.
The most expensive one you said about 400?
Even closer to 500K,
500. That's not cheap.
Not at all.
Okay, so you're really banking on bringing in a ton of revenue, a ton of NOI for these things, and then talk about the exit. You said $7 million valuation when you sold Onera Fredericksburg. How many units was that?
So at the time it was 11. We've since added another one, 12. And we're actually expanding that site from 12 to 35 in partnership with that public REIT Summit. That's our partner and the one that bought out 90%.
Got it. So you stayed in 10%.
10%, yep.
Yeah. And what was the key there to like positioning a property like this to sell?
This came through network, right?
Okay.
My partner knew the new CFO at Summit, and they were interested in alternative hospitality, kind of this unique stays space, pushing the envelope and innovation in hotels. Historically, they'd been more of a limited service flagged hotel REIT, but they had a mandate from their board to get into alternative hospitality, and they just really liked what we put together. It was in close proximity to their headquarters, and I think they were somewhat inspired by us pushing the envelope of modern hospitality and outdoor hospitality. And the numbers spoke for themselves, right? I mean, we had these incredible ADRs out the gate, well over $500 average nightly rate, over 80% occupancy. Some of our units were upwards of 90. So the numbers were there. And then when they saw how much we were able to drive in direct bookings, we went from 30% direct in year one when we were just relying on influencer marketing. And then we got it all the way up to over 80% direct when we really started investing in content. They were excited by that proposition as well.
Yeah, that's huge right there.
Yep.
And then what did the financing look like for them when they bought it?
The financing, in terms of how did they finance? They're all cash.
They're all cash.
They're a $4 billion REIT. So, with some of the new development, we've actually wanted to finance or get debt, and their threshold for good debt is so high because they have so much capital that it's actually been one of the hard things of working with a big company. Like we need to lever. We're a smaller player. We're new. We're hungry. So we need to lever up and use debt. But they're like, we'll just pay cash because we don't want to pay the 8% interest or 9% interest.
Yeah. So they will lever when the debt looks good.
Yes.
But they don't have to. Or they might say, hey, let's pay cash now. We'll lever later.
We'll lever later. Yeah. When the debt's better.
Okay, that makes a lot of sense, dude. So. A lot of freaking crazy stuff that you're doing, man. I'm curious, after doing all this stuff, the Airbnb stuff, and then now the hotels, you're also doing some management as well. And then you're doing social media management, marketing, all that sort of stuff. I always say for real estate investors out there, this is me when I jumped in the game. I thought, okay, you're going to buy real estate, you're going to live off the cash flow, it's going to be passive. And that was kind of a limiting belief. And so I tell all these real estate entrepreneurs out there, people that are trying to get in the space, I'm like, guys, you need to have some sort of active income in addition to buying the properties. Buying the real estate is a long-term thing. You're parking the money, you're burying the money into the dirt, and it's a long-term play. Great long-term investment, but you need some sort of active income. So I love what you're doing. You got a couple active streams of revenue here. You got the social media management, marketing agency, and then you got the property management company. Out of all the stuff you're doing, I'm curious, what excites you the most?
Yeah, so look, I love doing these one-of-a-kind landscape hotel developments, and I'll continue to do them strategically. But in terms of opportunity right now, I think there's a massive opportunity to bring hotels into the modern world of hospitality and catering to the modern traveler, being digital first, being social first, viewing Instagram as a new OTA that needs to be optimized and invested in. So I'm very excited for creating a digital first hotel management company that's not just for unique stays and landscape hotels and glamping sites, but also for 4-star, 130 room, Hyatt Boundless Collection properties. So really, getting into that realm, doing full service management that is very top line focused. So we're able to drive revenue in a way that most of these other management companies can't, because we know how to do social media marketing. We know how to do digital marketing more broadly, as well as branding. We know how to create a unique experience, and we're really good at revenue management. So because of those things, we can drive top line, which is kind of the golden goose. If you can drive top line, the rest of it can kind of take care of itself, right? If you drive top line, your margins get better. You still have to be good at lean and efficient staffing. And my view on lean and efficient staffing is that more staff isn't always better. I think the modern traveler today wants really great, warm interactions with staff when they have them, and they want all of their needs met and met quickly. But you don't need to see 20 staff running around at all times. You don't need a 3 or 4 to 1 staff to guest ratio to be luxury. You can even have a remote check-in, and that might be a better experience. It might be easier instead of having to fumble with the front desk or wait in line when you just want to get to your room. But because we sometimes have fewer staff at our properties and more of a lean staff model, we need to have the best people that we can find. So it's fewer staff, but better people. So we pay them well, sometimes better than market. In some cases, we're offering them staff housing. I'm putting myself out there quite a bit from like a founder-led management company perspective and pushing the envelope of modern hospitality and truly collaborating with our guests. So if we can get people to buy into that vision and passion, we can get really amazing people. So it's that combination of like being top line focused and pushing that, but also being efficient and lean on the staffing side, but attracting really amazing people.
Yeah, absolutely. So I mean, I know a lot of this game is really pouring your energy into one thing at a time, right? It's hard to pour energy into 4 or 5 things at a time. So it sounds like for you is the vision to really, really grow this property management arm. Is that right?
I would say so, and it's accretive, right? Like if we can kill it with this property management and marketing arm, then the properties we build do really well, and we know what to build. So it is accretive. And to me, it's all about having the right team and the right partners. You can be involved in a lot of things if you hire people better than yourself in every area. Then you can be involved in a lot of things. And I've done that with our GC and co-developer on the building side. He's phenomenal. He's way better than me on that side of things. I trust him. We have meetings weekly for every property. I get brought in when I need to get brought in, but he's phenomenal at making that run and making that operation go smoothly. And I pay him handsomely for that, right? I bring him in as a partner. I make sure he's incentivized. I make sure that he wants to be a part of this thing, right? I brought in a co-founder on the management side of the business that's the best that I know at revenue management. He's the best that I know at innovation and pattern recognition. He's helped build the Instagram marketing machine that we've built, right? So if I can bring in these people that are bought into the vision, want to do it, with me and with the team, then it's easier to manage a number of different things.
Will you develop another Onera Wimberley or Onera Fredericksburg type of property in the near future?
Yes, we will. We're actually getting brought in as development partners on a couple deals. So one other side of my company, Oasi, the services firm that does management and marketing, we also do design and development consulting. I've actually had some people from your community reach out to me and do some design and development consulting with me, specifically for the experiential hotel, landscape hotel side of things, which is pretty niche. And I do that because I like doing it. It's a way to like weed people out a little bit too. Like if they're willing to pay for some consulting, I know they're serious, and I can actually help them and invest time with them. And we might co-GP a deal together. We might end up being their management and marketing partner in the future once they're built. So I see it as a long-term relationship play. So I'm still very involved in the development and design side of things, sometimes as a partner, sometimes just as a consultant. And I always have a new concept that I want to bring to life that is happening in parallel. Right now, we're looking for land for the next concept that I want to roll out, which is more of a wellness club and spa-focused landscape hotel. So it's more anchored in a wellness club. There's membership. It's closer to a major market like Austin, and we can really get that like annual membership, day passes, in addition to the unique stays and the landscape hotel units for overnight guests. So it's a little bit of both. And the other thing that wellness club allows us to do is drive retail sales. So we can sell soap, shampoo, conditioner. We can, sell perfume. There's so many different things that we can sell through that vehicle. And we've become at Oasi really good at building brand, building audiences. And so if you can do that, you can sell products.
Yeah, I love that. Ben, I'm a big fan of everything you're doing, man. Always dropping a ton of value. Excited to kind of see where you take this next, and where can the folks get in touch with you?
Yeah, so you can find me on LinkedIn, Ben Wolff, 2 Fs. I post a lot on there. I have a newsletter you can subscribe to from there. Post a weekly newsletter talking about social media marketing, the modern traveler, all of this stuff. I'm also on X, @UniqueStaysGuy, and Instagram, I am Ben Wolff.
There it is. He's Ben Wolff. Rich Summers listeners, thanks for tuning in. We'll see you in the next one. Peace.